You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That rockin' bit of tunage means it is time once again to tune in to the Thursday edition of the old OB, a.k.a. the Option Block, a.k.a. your bi-weekly source for all things options related. My name is Mark Longo. I'll be your host, your guide, your navigator through this crazy world of options and this journey upon which we are all embarking together. Make sure, if you like what you hear for this show, for the entire network, pick your poison. Make sure you leave your reviews on your platforms of choice so new folks can continue to discover this network. We've seen a massive influx of new listeners over the past 6 months for obvious reasons. We want to keep that flowing. We want to keep new people, give them an alternative, a safe, reliable alternative. We've been around for a while. We've been doing this for a while, so we won't steer them astray. So if you like what you hear, make sure you keep those reviews coming so new folks can continue to find a path to our door. And of course, keep those questions coming. We do love to hear from you guys most of the time. I'd say 98% of the time. And let's see who else we're hearing from on the program today. First, let's go out to a quaint little hamlet where I am sad to say I have interrupted his kayaking for the purposes of options, education, analysis, and knowledge. Yes, he is the rock lobster himself, freshly out of breath from the ocean, and also beaming in from the land of Maine by way of the land of the pit. Mr. Rock Lobster, welcome back to the program. What's up with the morning kayaking in Maine, sir?
I got my breath back. I've got till like late October, and then the window closes. So you gotta take it while you can get it. Plus, we had a neighbor bought a place across the way, so officially nothing to buy anymore here in the middle of nowhere. Oh, so now I can't set up my compound directly across from yours to rival you? We can't have like a Hatfield versus McCoy thing going on? That's not an option anymore? It could have been great. You could have launched water balloons at me from all the way over there, like 300-yard water balloon battle. You would have had a grand old time. I was planning something like someone else beat me to the punch. Darn it. Dag Nation over there. I'll find another plot of land from which to mock you, sir. Meanwhile, though, let's head on out to another closer plot of land, a.k.a. St. Charles, where we are joined once again by the uncleist of Mikes, on perhaps not the most Uncle Mike of days. He is, of course, Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program to you as well, sir.
Always happy to be here, and in St. Charles, option trading comes before kayaking.
There you go. A man with his priorities in order. As we get our show in order, it is time to head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. That music means it is time to do it. It is time to break down what the heck is trading, what is rocking and rolling, lighting up our tapes out there collectively. Like I mentioned at the top of the show, they're not exactly the most Uncle Mike of days out there. Most of the major indices firmly in the red right now. We got the Dow playing the laggard yet again, off a mere 0.75%. We've got the S&P off over 1% now, 1.25%, and the Nasdaq closing in on 2% to the dark side out there. Gold also off 1%. Crude oil getting a bit of a lift, 41 and change. We'll get to that more on TWIFO in about an hour and change. I do believe maybe the Rock Lobster, maybe I can twist his arm into joining me on there as well, so we'll have some fun in store for that. So if you like all the commodity, a little more equity vol, and all sorts of other fun stuff, stay tuned for that in about an hour, or hit next on whatever device you're listening to this if you're coming in after the fact, which I know many of you are. Our old friend VIX Cash coming into Showtime was threatening the 28 handle, about 27.80 or so. That's come down about 27.75 pretty much. That puts it up not quite 2 handles from our last show, about 1.9 handles. We got VVIX also down to about 104 and change. That puts it off a little over 6 handles from last show. So well below that frothy 120 barometer. It isn't that far away now. It's about not even 10 handles, about 9 handles away from what we consider to be primarily the pandemic low of that. I mean, it did touch in the mid-80s very briefly, but outside of that brief blip in January, it's pretty much been about 94, 95 and above for the entirety of the pandemic. So not that far away from that on the low end. So maybe something to pay attention to on the vol side there. And, of course, our old friend VXX can't really make up its mind today. It's given back a little bit right now, off about a tenth of a point, a little more than that. So about 24.85, 24.86 or so come into Showtime. So off slightly, down from about almost 25 even on our last show. So that's where we ended up today. In terms of where the markets are ending up right now, it seems like a lot of things are weighing on us out here today. Of course, we had Powell and company yesterday, perhaps not delivering the words of hope and support that a lot of folks were looking for. They did say they're going to hold rates till pretty much zero until effectively the end of 2023. So that gives us a long roadmap for very low rates. Of course, they weren't really aggressive on the stimulus front, which is some folks were looking for. So that maybe saddened a few folks out there, perhaps contributing to today's sell-off. We also had jobless claims today. They fell, so that's a good sign in mid-September, but of course they're still very high, and that of course shows that there still are a lot of job losses out there as a result of this pandemic. I don't think that's going to really surprise anyone. So clearly maybe the 1-2 punch of the Fed, and maybe these numbers not exactly blowing anyone's skirts off enough to really kind of weigh on the markets, or it could just be, hey, another day of profit taking out there. At the end of the day, it's more sellers than buyers, right? And that's really what matters out there. Of course, we all are also living in the post-snowflake blush out there. Everyone's a snowflake out there now. This is one of those IPO friends. I haven't seen one of these in quite some time, at least to this degree. And it's funny that it was Snowflake, because not exactly a household name, this one, a cloud data company, effectively. And yet it was all the rage yesterday. They raised $3.4 billion in their IPO, sold about 28 million shares at 120. That's after revising their range up. They had expected 75 to 85 last week. They revised it up to 100, then to 110, and then finally to 120 when folks like Berkshire and other Salesforce came in to take pieces off their hands there. Still, the trading just took off from there. It gapped up. It started trading, I should say, at 245. That again shows you the IPO process. Maybe they left some money on the table as if they went IPO at 120 and it opened at 245. That's why the IPO process is always such a dubious process. If you're going to just go Dutch auction, let the market dictate where these things go. But that's an argument for another day out there. Instead of letting some opaque investment banker try to determine the market sentiment. Because they always do a great job leaving $100+ per share on the table here. And then they got up to, 253, almost 254. So that's pretty much well north. At the peak, at the apex, it was worth almost $71 billion. Just saying that out loud brings a smile to the face. $70.4 billion. That's about 5 times what it had valued itself at in February out there. So a little bit of hot IPO action coming back into the market as well, which is maybe concerning or refreshing, I suppose, depending on your point of view, what you like to see out there. Either way, it got everyone's attention. All of a sudden, everyone was super jazzed about cloud data in a way we haven't seen in a while. So a lot of interesting stuff to parse there. Let's go back around the horn, the opposite of the way we came. Let's start in the land of Uncle Mike. He can always talk up these markets even on these down days. Mr. Uncle Mike, sir, what is lighting up your tape, and are you indeed a snowflake now, sir?
I'm anything but a snowflake. Sometimes maybe I've been accused of being a flake, but I don't know about a snowflake. Anyway, nothing against the stock or anything like that, just not my game. So, in terms of what we have today, the first thing that's catching my attention is we are relatively flat in IEF, and that is the 7 to 10 year Treasury ETF. And I'm personally, because that's something that I do use a lot of. I like it from the standpoint that it's really boring. And in really boring things, it's nice to sell covered calls against it. So the fact that we're going to have stable rates, like Powell said yesterday, I'm actually more excited about that for IEF because that gives us some certainty. And if you just look at a chart of IEF, it's very boring lately. And so what I'm trying to do with it is just sell some premium on it month in, month out, and just collect some pretty good premium. So the concept is that I can get a pretty decent yield while having the risk of a U.S. government treasury. Now, of course, anything can happen. It can go down, it can go up, whatever the case may be. And I have to be prepared for that, which I am with risk management as best as I can be anyway. And so, but with it, I do think it's a very good opportunity where if you were normally going to want the risk of bonds, and you're like most Americans saying, I hate bonds because the yields are so low, this gives you the opportunity to sell some covered calls on bonds, whether it's LQD, if you wanted to do it with corporates, if TLT, if you want to get a little bit more aggressive and go a little bit more longer term. SHY, I don't know if you're really going to get much out of that. That's the short-term treasuries, even on the premium side of it. But if you're willing to go a little bit further out, you can get a little bit greater income. Of course, once again, you have to be able to be prepared to trade it because a covered call is technically a trade. It's not a buy and hold investment. But on the risk side of it, it's just the same thing as owning U.S. government treasuries, corporate bonds, or whatever you're looking to invest in anyway. So if things do go down, there's not much more risk. There's technically less because you have that short premium on it. So that's something I'm actually excited about. If we have low rates forever, then I could see these bonds doing really nothing. And for the time being, the vol is higher on them than I think they're going to move. So I really like selling premium on them at this point. We are relatively flat with silver today, so not a lot of movement there. And in terms of what today is, from the standpoint of the markets, we still are up on the year. We're up roughly, we're up roughly 4% on the year in the S&P 500, even with today's pullback. And so with that, considering that we've had a global pandemic, that's really not an awful thing by any means. Now, with that being said, let's talk about stimulus and let's talk about macro issues of what could affect the market. 87.5% of the time, if the market is higher on the year, the incumbent president wins. Now, if me, just a average guy that just likes to do his best for his family, his clients and whatnot, if I can figure out that statistic, I'm going to go out on a limb and guess that the Trump administration, they're going to have somebody in their campaign that's going to figure out that statistic as well. And so when we have that, I'm willing to bet that we might not get the stimulus right now, but I'm willing to bet for that reason sometime either in mid to late October that we are going to get some type of a stimulus of some sort. I think the Republicans will try and drag it out, but I think they will try and get it. So that way, when Americans get the money in their pocket, they will have that on their minds, and they won't be as upset about them losing their jobs or their 401k being lowered. I think we might get a little bit of a pop in the market due to that. So I think it is technically uncertain if we're going to get a stimulus check or not as a nation, but I'm willing to bet that at some point in October, possibly late October, that's when we're going to get it for the reasons I just mentioned. So that's another thing that's on that I was thinking. In terms of everything else in the market, from the standpoint of sectors, technology is leading this market down right now. now. So I think it's just an old-fashioned pullback, quite frankly. I mean, we're down a little over 1% on the day in the S&P 500. That's not by any means a crazy day. It is a down day, and it needs to be respected, and risk needs to be managed, of course. But today, I think we're just having a good old-fashioned pullback at this point. I think that if the Fed was saying something that was really dramatic, horrible, awful, and bad, I think we'd be down a lot more at this point. So that is what I am seeing in these wonderful markets.
Uncle Mike perhaps advocating for an October surprise version 2 redux, if you will, out there. Interesting to see if the Dems would let such a thing happen. They certainly have access to the same data. So you're right. Interesting what will happen. Of course, the markets are pricing in. The vol surface certainly pricing in a lot of skullduggery and tomfoolery heading into, and perhaps more disturbingly, coming out of the election and going on for some time, even though January has calmed down a little bit, which perhaps is a good sign that maybe the markets aren't pricing in a just torturous period all the way through to Inauguration Day, because no one wants to see a repeat of Bush Gore and all the fun that happened there. And speaking of fun, when I think of fun, I can think of no other person than this character, the Rock Lobster. He is perhaps the quote-unquote funnest guy around. Mr. Rock Lobster, sir, what do you have in store for us that's going to bring the fun today?
I thought I was the funnest guy around.
You're the happiest, most optimistic.
You're the happy bullish guy. The happy bullish guy. I did send you a picture of a cricket that I wrangled out of my office just so I don't disrupt 2 shows with the crickets today.
That would be very nice of you. Thank you, sir.
I did do some cricket wrangling this morning. I wanted you to know.
They followed you in from the kayaking.
I went to the mattresses so you could have a cricket-free environment for this.
Wow. Old school reference. A point in the chat if anyone can remember what the hell that's from. That's an old school one.
See, actually, I can remember that reference, not unlike the 18 one that I totally whiffed on last night.
Yeah, you remember that, but you can't remember literally any 80s TV theme at all.
It's really quite unbelievable. But I'm going to let it ride. I'm going to let it pass. So a couple of things. So we've had this, what I would call odd vol condition because of the election. Volman did tweet out some, you have to think about, what is each part of the curve actually pricing? And so if you're a VIX junkie, right, VIX right now expires in October, right? That's what it does. It'll be mid-October at this point. It's the 30-day forward vol rolling. There's a calculation on the SIBA website. And then, of course, you have the way the futures interpret the actual SPX, implied volatility in time. So there's a November cycle in SPX, there's an Ox cycle, DEES, whatever, but those all have volatilities. And the futures, in order for the thing not to be arbed to all craziness, interpret those vols. They do a forward vol shenanigans and come up with a value and show a value for what those are, because of all of the futures are priced relative to where the VIX is now, what the VIX will be on expiration, because that's what the future's saying, right? The future's like, if you want to buy October VIX, you have to pay $30.55 for it right now. That's what it says. So on October expiration, if you want to buy VIX, you have to pay $30.55 for it right now, even though it's trading $27.69. So there has to be something going on with how the volatility will look on October expiration and what VIX will actually be to price that future. So the hardest thing about trading VIX is, what the hell are you? Sorry, Jacardi's she's gonna make sure that curse word goes out because it's family program. And so the whole point of this is if you're trading these products, you have to be really cognizant about what you're actually buying and selling. So the trade I have that I put on like decent size is like Ocnov time spreads, but in the SPX and SPY, not in VIX, not in VIX yet. because I think the market is pricing election shenanigans, whether it happens or not. If you look through, all the pricing right around the election, the weeklies, there's pretty high relative vol for those, like the no 4, no 6 cycle. And then it subsides by no 20 a little bit. So there's some pretty substantial pricing involved. So whether we have the shenanigans or not, and I don't know what's going to happen, or the uncertainty around it, the market has placed a bid on it for right now, and it is extreme. Okay, it's the most I can remember seeing vol in an election. Like if you look at 4 years ago, even when Hillary had the whatever with right when Comey says, hey, we got to look into this or something, that vol like maybe popped to 23 or 24. All right. And currently the cash to 27.74. Remember, this is fully 2 months before the election. And the futures are in the 30s. So the market is definitely pricing something else. Now, is the COVID a factor? Sure, because we haven't been able to drop below 21.5 in 6 months. So that I would say, yeah, that's a major thing. And myself, I kept thinking it would because, this thing is going to subside. It's going to and it never does. So you have like these two things now that are kind of piling on. Things that could change this drastically. A vaccine that people actually believe might work. Okay, that's one. A clear winner or a clear leader in the election right now, as far as I can see from all the betting polls, they only keep getting tighter, right? I don't really look at like CNBC polls or anything like that. I just look at the betting lines, okay? And what are they saying? Getting tighter. So you have those things, and it just makes for a volatile brew. And at least for right now, that's where vol is. Do I think there's a lot of opportunities in different stocks? 100%. So I'm kind of the same mind I was in March, and people, I got made fun of for selling. Think of a crazy price for a put and sell it. That's kind of what I'm doing right now. So I'm just like, okay, I'm looking at January. This vol is pumped. What do I want to own 30% or 40% lower than it is right now? And what's the return I can get on the put? And if I get, somewhere between 7 and 9% by the end of the year from here, I'd be happy. If not, I'm going to get a whole bunch of stock a whole heck of a lot lower than where it is. So I don't want to think too much about going through the election. I would like rather to, kind of trade the stuff that I see. But as far as like long-term opportunity, you kind of have to have a bid there in order to get something. So that's kind of where my brain is sitting right now as far as the election goes. If you're looking for a signal, how much I would say as time goes on, we should drop more into contango, like the OX should get a little lower relative to the NOV. Because that October cycle, that regular OX should be coming off. So we'll see actually what happens. Even though it should happen, doesn't mean it will happen. So I think there's, and a secondary part is SPX right now is essentially a giant earnings play. The earnings play is centered on the election date. So it's going to trade just like an Apple or a Google or anything else into earnings. You have a known date. It could be massively volatile day. And all of Black-Scholes' assumptions break when you have extreme volatility for one day because the model wasn't designed like that. So when you're looking at how vol trades, think of it more like an earnings event and how you would play an earnings event in a particular stock. This time, though, with the outcomes a little bit differently because it's broader market. But anyway, of course, those are all my opinions. Don't get yourself hurt by them, but that's what I think is happening.
Interesting. Both you and Uncle Mike perhaps paving the way for a potential October surprise here, and perhaps an early November surprise leading into the election. Kind of hard to argue. I mean, the markets are certainly pricing in that perhaps another shoe, perhaps two, is going to drop between now and the election. Of course, we did see, the announcement of the Comey investigation there, leading right into the election last year. I remember that. I think that broke during vol views, and it was quite a volatility event. So who knows if something else like that is lurking in the wings. We'll have to just wait and see. We don't have to wait and see, though, to see what the market is up to right now in terms of where the options action is right now. Certainly not a heck of a lot of action in VIX land. It's like someone forgot to wake up VIX today. Not a heck really going on out there at all. Only 94,000 contracts on the tape as of a few minutes ago. ADV ticking up, though. It's up to about 422,000. That's a far sight north of the 290,000 or so it was not too long ago out there. So a little bit of a rebound in VIX options, even though today apparently not going to contribute to that a whole heck of a lot unless VIX is going to kind of wake up and get rolling. What has woken up, though, and what is rolling is SPY. Already about 3 million, about 3.1 million on the tape in terms of contracts as of a few minutes ago. The ADV is only 4.1 or so. So it's already well on its way to eclipsing its own ADV today. The S, same story, about 702,000 contracts on the tape as of a few minutes ago. The ADV, about 1.1 million out there as well. So both of those well on pace to exceed their ADV today, even if VIX is still kind of sleepy out there. The Qs, same deal, 1.25 million contracts on the tape as of a few minutes ago. The ADV about 1.42 out there. So the Qs also on the rampage today, also on pace to blow past their already getting a little bit inflated ADV. And IWM, similar story, at about 383,000 contracts. The ADV out there, 402 out there. Let's see how our friend IWM is faring out there. It's off a little north of 0.75%, about 0.85%. So out there, kind of in line. It's been an odd duck to watch this week. It's kind of bucked some of the trends of the major indices. Again, if you want some more small cap, stay tuned. We'll get into that more in a little bit over there on TWIFO. Now let's dive into the top 10. What the heck is lighting it up out there from an overall options perspective? Cost you about 178,000 contracts to break into the top 10 today. That gets you all the way to NVIDIA. We've been talking about them for a while. Some big moves going on in NVIDIA land. Of course, they've been the bellwether for a lot of advances on the technology front, mobile, crypto. Now, of course, they're talking about picking up ARM. I believe something like a $40 billion transaction, so a pretty sizable transaction out there. Certainly will transform NVIDIA. They're already a pretty powerful player on that gaming and PC and technology side, and now with ARM, that would certainly change the game quite a bit. So interesting stuff out there. NVIDIA lighting it up to the tune of 178,000 contracts. Number 9, everyone looks at it, it says Vale. Of course, it's Vale. It's out of Brazil. 188,000 contracts, even though Vale makes it sound like it's a nice ski resort out there. Number 8, American Airlines, 199,000 contracts. Number 7, Amazon, breaking into the 200K now, 229 for the Amazonians out there. Number 6, Microsoft, 234,000. Not exactly in the TikTok dance anymore. Doesn't seem to be hurting them, at least from an options volume perspective for number 6. Number 5, AMD, back in the top 5 again, 237,000 contracts. Number 4, Facebook. Not exactly the best headlines for Facebook over the last few sessions. They, of course, have all these large social media players pushing to freeze on Facebook. Of course, they did also announce an Oculus Quest 2 as well, kind of out of the blue, maybe as a bit of a counterpoint to all that bad PR they're getting. Either way, it's accounting for nearly 300,000 contracts on the tape, and it's good for number 4 on our top 10 here. Number 3, GE, back in the top 10. Good old GE on a bit of a rampage of late. 516,000 contracts. Remember, there was a time not too long ago where the top 5, perhaps even the top 3, wouldn't be complete without GE. It's been a while since we've had that again, pretty much since the pandemic really took off. But now GE back in the top 3 with over 500,000 contracts on the tape. That means number 2, it's the old TSLA, 910,000 contracts. These things they have not stopped since that split announcement. It's just been fascinating to watch. The brokerage industry should just be sending checks to Musk and to Tim Cook and just blowing them kisses and Christmas cards, because the brokerage industry it consists entirely of Tesla and Apple at this point. And then a little bit of SPY and maybe some VIX and some others thrown in there. But those two alone, just the darts they're generating, it's keeping people happy in the brokerage space. That means number 1, of course, Apple. 1.66 million contracts on the tape as of a few minutes ago. You're hard-pressed to find a day now where Apple isn't doing over 1 million contracts a day. So crazy town out there in both of these names. Let's look really quickly, see where the most biased paper is in our top 10. It's going to be GE with 82% of that paper coming on the call side of the ledger. So a good 400K and change worth of paper coming on the call side of the ledger in GE. Interesting stuff. Actually, no, I take that back. Vale Number 9 had 87%, much lower number, 87% of 188,000, but still 87% on the call side. So a nice close dance there between GE and Vale. Let's just call it Vale for fun because it sounds like a nice, cool ski resort. Let's move on out to earnings. Not a lot on the tape this week. We got Lennar on Monday. We had Cracker Barrel, FedEx, and Adobe on Tuesday, and that was kind of about it for the big names out there, unless you're a big fan of Oak Street Health. They were on Wednesday. Of course, we have all those names and all the ones that have already reported their move reports, their move results reports, and indeed the move and earnings season reports over there, theoptionsinsider.com. That's the place to go. Click on the Options News and Articles tab. If you go there and you're like, wait a minute, it's all shows. It's a lot of shows, but it's also Options News and Articles tab, top right corner of the homepage. That'll get you to all the other good stuff over there. If you did that, you would see that the earnings season has not exactly been a robust one for premium buyers. It's ticked up a little bit. It was 72% on our last report. Now it's up to a whopping 74%. Still pretty much blood red out there for premium buyers. Bear that in mind as you're trading around earnings. As we head on into our next name, or I should say our next segment, it is time to go into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get weird, let's get wild, let's get odd. Yeah, it's time for the odd block. Going to kick things off here. What did our Eye of Sauron find today? Let's see. It is Suncor Energy, ticker symbol SU. This is an oil sands company up there in Alberta. And let's see, trading right now, $13.50 or so, off about 13 cents. Nearly a full percent, but not a huge mover day out there for Suncor. Let's look back over the year that has been out there. We all know the travails of the energy market over the past year. This chart pretty much reflects that. A year ago it was trading 32 and change, and it ticked up to about 34.5. That was pretty much their high right around mid-January. Then they kind of trended down. By the time the pandemic sell-off really started in mid-February, they were already trading $30.50. They had given up quite a bit already there. And then by the time the big sell-off commenced, by the time mid-March rolled around, they got down to $9.60. So bit of a rough go for Suncor. Interestingly enough, they didn't have a big sell-off around the negative inversion in crude oil out there. It didn't seem to really hit them too hard. Then, of course, they had their near-term peak at 21.28. Guess when, listeners? I bet you if you're listening to this show, you probably don't have to look like I don't. You can just guess off the top of your head. It's June 8th, and you would be correct. June 8th, 21.28 for another name that kind of peaked there and now is down quite a bit from there. Trading, like I said, $13.53 right now. Of course, the last couple of weeks, outside of this past week, have not been the best for crude oil out there. Again, going to get to all that in TWIFO in a little bit as well. Let's see what our Eye of Sauron found out here. Looks like it was the OC14s that lit up its radar today to the tune of 8,000 of these bad boys going up for 50 cents. And these were 50 at 55 when they went up. So your first blush might be, hey, that's a bit of an overwrite, but that didn't really smack right to me. This is one of those ones you kind of want to dig a little bit. Luckily, I had a little bit of time right before this one up. Sometimes these come right across my screen. I have to just dive right into them. But I had a second before this one to do a little bit of digging, and that confirmed my initial suspicion. Because when you see a market that tight, 50 at 55 and 8,000 going up on the bid at 50 cents, probably something else is afoot. Maybe there's a large resting bid there. That seems to have been the case here. Because a total of nearly 14,000 of these things have traded on the day so far, and there were a lot of other prints going up, including 1,500 for 45 cents, lifting the offer. So it seemed like they were building up from smaller lots and smaller lots to this big 8,000 lot. And they were lifting the offer every time until they finally just parked a bid for 50 cents for the rest, and they got filled. Also worth noting, the IV ticking up ever so surely on this strike throughout the day as these trades went up. Started up around 48%, and as these trades went up, it topped out almost 51% for some of these latter trades out here. So another sure sign that someone's probably buying these bad boys. Mr. Rock Lobster, is that your takeaway as well? Someone's got some near-term upside love for Suncor, or do you think the opposite? You think someone's coming in to overwrite the hell out of this thing?
Very, very, very interesting. This is a tough one. I have had a hard time because I'm looking at oil and oil-related stocks, and they're actually holding up pretty well today, if I am not mistaken. So they had a pretty decent rally, although from just awful levels yesterday. But SU was a $16 stock in the beginning of September. So, I mean, if you're writing this, a half a buck is still not bad on a $13 stock. But I don't know. It does feel like more like buying paper. There's a little bit of a bid to the volatility, which generally suggests somebody's buying it, like vol's up around 5 points. And normally when something has a big sell-off, you remember the old days, right? Things come down, all of a sudden you blow the vol up, you make the calls more expensive so that when the public came in to buy them, they had to pay more money because you were busy buying stock against the calls you sold. Good times. This would be one of those where I think it really was a call buyer, resting bid. They're a 55-cent bid now, probably because somebody's mad they didn't get to pay 50. And then we'll see what happens. And then you write these calls and you buy a ton of stock and you just hope for the best. So that kind of feels like what this is, because there's almost no open interest in the cycle.
Yeah, you got to work a little bit to get 8,000, let alone 14,000 done in a name like this that doesn't really do a lot of paper here. We'll put this one in the to-be-watched category to come back to this one a little bit as well. You'll be happy to know, Mr. Rock Lobster, because you were belly aching so much earlier this week. We are going to review some names today as well, just to make you happy. See the lengths we go to keep the Rock Lobster happy. But first, we have to drop our next bit of analysis into, it looks like some more REIT put action, Mr. Rock Lobster. You love these. This time, it's Geo Group Inc. This is a REIT out of Boca Raton, or as the locals say, Boca Raton. They invest in private prisons and mental health facilities. An interesting niche, to be sure. Trading right now, $11.50, up about 5 cents. Ticker symbol GO, GEO. This one has had another tumultuous year. A year ago, it was trading almost $18, $17.84. Looks like it topped out at, first off, it sold off down to 13 and change by December. Then it rallied again up to about 18.42 back in February. And then we all know what happened shortly after that. Kind of the great nadir took this one as well. How low did it get? It got down to $9.95 on March 23rd. And then it almost completely rallied back, got up to 15.13 again by April 14th. Then it sold off and gave all of that almost back again, down to 10 and change again by May 15th. So just a crazy couple of months. And, of course, it topped out this one a little bit differently. Decided to paint their own, blaze their own trail here, not topping out on June 8th. No. But June 9th. That's the first one I've seen on that date for $14.67, and it hasn't ever looked back from there either before selling off again down to $10.60 or so, and now slowly making its way back up to where it is today at about $11.50 out there. Let's see what our Eye of Sauron found out here, Mr. Rock Lobster. Looks like puts, smells like puts. It's definitely puts. It's the March puts, March 8 puts. So an interesting strike. Again, this is almost $2 below their 52-week low out here. Let's see what they're up to. Let's see if we can intuit it, Mr. Rock Lobster. 4,500 of the March 8 puts going up for 55 cents. These things were 35 cents at 55. So not a lot of nuance to this execution. Not a lot of other paper to parse either. This is pretty much the only big print that's gone up out here today. So Mr. Rock Lobster, when it looks like a duck and it quacks like a duck, chances are it is a duck. This has to have all the airs of some opening downside paper, paying 55 cents to hedge himself out $2 below the 52-week low through March. The next cycle for earnings are on November 5th. So there's going to be a couple, obviously, between now and March. So he does get a couple of cycles in for that. But still, it's an interesting level, interesting price, and just an interesting trade, Mr. Rock Lobster. What do you think about someone paying up a fair bit for these $8 puts in Geo Group?
You know what? I'm going to take the opposite side, I think, of that idea.
You think they sold the offer?
No. I think the offer was posted and they wanted to get them sold, and this is a line in the sand put.
Really? It'd be impressive. It'd be impressive. You talking about skullduggery earlier. That'd be an impressive offer to post just to match it. Cross it on your own offer.
I'm trying to, like, I'm looking at it. I'm like, another thing too is there's really no flutter in vol at all. Like, nothing. Like, this is not a widely traded name. It's like, and there's certainly several things that could go wrong, right? So it pays a pretty good dividend. Maybe they're predicting the dividend is going to stop. I'm just looking at it. I've never seen this name before in my life, but it has a pretty good dividend history, and they haven't given it up on it. If it's not a print from that direction, you know, I'm like, why the hell do you buy these puts? Like, that's my question. Like, why would you buy these puts? And they're about to pay another divvy, right? And the low of the stock is 10. So I'm like, the only thing I can think of is somebody's looking at vol's pretty high, and they can either collect, and I'm just doing the arithmetic, right? So out to March, they're going to collect a NOV and a FEB, put, which is roughly, apparently they're saying $1, right? The stock does not look like it has a lot of giddy up in it. It could, of course, but it's not. So they're like, okay, I'll just sell the puts for 80 or 55 cents. I'll collect what I think is at least part of the divvy, right? And try to buy the stock at a lower. I don't know. Maybe I'm reading too much into it. I'm just doing the arithmetic on it as to why, because it makes the put purchase kind of hard to, you know, like, what are you going to get out of it? That's, I guess, my problem. Like, where's your win buying those puts?
That was the initial blush of it, right? Is what is the win on that? I certainly like it better your way. I will certainly say that. I much prefer your version of events out there. I will say, since this came across our radar, since we started the show, another print has gone up. Maybe we'll add confusion or perhaps clarity to this. They are all the way out, same puts, but out in Jan this time. Jan 2023. So this guy's going out a bit of a way. Another 2,500 have traded. Guess what the market was on these bad boys? No bid at $4. So that's the market makers really trying their darndest there. These went up for $2.80. They were crossed. I should note the other ones were crossed as well. So, which doesn't surprise me. You probably got to cross to do anything over a couple of thousand contracts and then like this. You got to find a counterparty out there for that. So these were crossed at $2.80 a couple hours after the initial trade. So, Mr. Rock Lobster, does that change your analysis, or does that make you double down on your analysis that there were someone also came for 2,500 of these Jan 2023 8 puts? Someone's really got an axe to grind on that 8 strike, sir.
Yeah, you know, I have to say it's just I'm going with that as a you know, I'm going with the put sale. That's what I'm going. It's a like what I would call like a value play, fundamental play. And that's what they're doing. And it looks like it's real estate company in the U.S. and all over basically the, I guess, ex-colonies of the U.K. They're all still colonies, I guess. And, you know, and real estate isn't kind of crushed. This company seems to be doing okay. But anyway, I think it just looks like a value play, you know, a line of sand value play, and we'll see how it works out.
You've got line in the sand on the brain, sir, I think. This is going to be one where I think we agree to disagree, which is fun. Maybe the listeners can chime in and see which way. I will say I like it better your way. I'm certainly, I don't know if that's a bit of a Byzantine effort to go through to get all these done. And if they got someone to cross it for them on the offer, then more power to them. They need to go back to that broker. That's an impressive feat. But nonetheless, I think these are probably buying. But hey, you guys can weigh in. This is an open conversation here. Let us know what you guys think. We got some time. We'll come back to these. We got some time, certainly till the Jan 2023 puts. We probably won't wait that long. But we'll definitely come back in by March, and maybe we'll have a little bit better idea of what the hell was going up out here. Would you rather buy these or sell these? I have an idea. I think I know which way you guys would lean. But hey, hit us up. Let us know. We'd like to hear from you guys in all your various flavors and permutations. Now, because we heard him earlier this week, he was kind of complaining. He wanted to go back to some of his favorite, his line in the sand puts. Mr. Rock Lobster loves himself some line in the sand puts. So in order to accommodate him, we did open up the Wayback Files. Going to go all the way back to August 3rd. The dark days of August 3rd. We were talking on the show that day about line in the sand puts in Fox Corp Class A stock. At the time, we profiled 4,250 of the August expiring on the 28th. So these are in the weeklies. 21 puts going up for 21 cents. That's not confusing at all. They went up 4,250 times. They were on the bid. We had kind of analyzed it and thought it looked like a good old-fashioned line in the sand put. At the time of the trade, the stock was $25.62. And let's see, that was about 18% out of the money. Worth noting, let's see, the stock closed at not that far away on expiration. It closed at 26.01. So these bad boys never really came into danger here, the 21 strike. Let's see, 4,000 traded also not that long later, close to expiration on August 18th, but it was for 7 cents. But weirdly enough, it seemed like a lot of churn and burn because the OI pretty much stayed unched on that day. So it's still over 4,000 going into expiration. So it seemed like it would have been strange if he took them off for 7 cents and they were so clearly his way at that point. So it looks like Mr. Rock Lobster, this person put him on, and he pretty much kept what he put on, the total of around 90,000 worth of premium in these puts kind of expired worthless. Is that your take as well, sir, or do you think you're flipping the script and he bought all these bad boys?
Yeah, I think I think we're 1 for 1. Are we 1 for 1 on the line in the sand?
Does seem like it, sir.
There's I'm saying no way somebody buys those puts. That I don't know. I still think that was a line in the sander. Because why are you buying those things? Why? Why are you buying them? It looks like they made a little bit of money. Again, you notice the dollars. Basically, buy your girlfriend a nice Ferrari, like a used one, 90 grand. That's my my line in the sand criteria, because somehow they always end up pocketing around the same amounts, around $100,000.
Why does it have to be for your girlfriend? Why can't you buy yourself a Ferrari? I mean, why you got to be giving away these Ferraris that you're making all the time here? Well, I concur on that one. I think they kept that money. Let's see what you guys think, because it's Thursday. It's time to open up the mail block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. You guys ask questions. Sometimes we turn the spotlight back on you and ask you guys questions. We did that beginning of this week. We were talking about some interesting strikes we've seen in our option scans of late, particularly out there in that T name you guys love or love to hate. Yes, we were talking Tesla. So we asked you guys beginning of the week, what do you think is the largest open position in Tesla options right now? We asked you to go on the honor system, no cheating, no looking it up. Use your gut. What does your gut tell you? A lot of people chimed in with interesting ideas and DM'd us with what you thought it was going to be. And interesting to see what people thought. Remember, we gave you 4 choices: Jan 500 call, D's 350 put, June 750 call, or the January 1 strike put. And you guys have been voting hot and heavy on this one. It actually goes out in about an hour, so if you're listening to the podcast, it's done. But if you're listening live, you have a chance to go make your voices heard, even though it does seem like the votes have lined up a certain way. Before I reveal that way, let's go back around the horn. Let's start with Uncle Mike. I do believe on the last show on Monday, Mr. Uncle Mike, you were leaning on the D's 350 put. Is that A, still your choice? And B, more importantly, where do you think our audience lined up, sir?
I'm still I stand by it. I still think the 350 put is the most active. I haven't looked at it. I don't really follow the stock very closely, but I think that's going to be the one with which there's going to be the most open interest in terms of the audience. I'll still go with them. I think they're going to be in agreement with me on this.
You're too busy watching Snowflake to watch Tesla, right?
Yeah, good point. Yeah. I watch them both about equally.
Tesla, or I should say, Snowflake, a core holding of the Strategic Night portfolio, listeners. Check them out over there. All right. Mr. Rocklops, I do believe you had the same vote. You thought it was D350 put. A, is that still your vote? And B, what do you think our audience is voting for before I reveal the results?
I'm thinking it's the 500 call, and I think the audience is still basic. I think they switched to bullishness because I think since Monday, Tesla's up like $70. So I'm going to guess they jumped on the bandwagon, said 500 call in Jan.
Ironically, you are correct, but perhaps not for the reasons you thought. The 500 call has been leading from the beginning. The Jan 500 call, 53.2%, followed by, that's just obviously the lion's share of the winner, by number 2, the June 750 call with 19.5%, followed by number 3, the D's 350 put, 18%, and the Jan 1 put, a mere, a paltry, a meager 9.3%. Would either of you care to hazard a guess as to which one the actual answer is? Because I'll tell you right now, the audience is not correct.
Wow. You know what? I'm gonna go 750 call in June because people are freaking crazy.
Mr. Uncle Mike, do you want to stay with that D350 put?
Sticking with the D's 350 put, I think there's bondholders out there that are scared. Well,
someone's certainly scared because the winner chicken dinner by a large order of magnitude, 181,310 contracts are open right now on the January 1 puts.
Holy cow. Wow.
I knew that one would bring a smile to your face. Yeah, there's nothing else even close. The next closest is the SEP 20 put 2-0 with about 116,000 contracts open, followed by the June 2022 1 put with 107,000, and then the next Jan 2021 20 put with 101,000, and the bottom of the top 5, the Jan 2 put 2 even with 100,000 pretty much even out there. So there's no calls anywhere even in the top 10. You got to go all the way down to the Jan 80s with 57,000 of those bad boys. Those are looking pretty good right now. With 57,000. That's the first and pretty much only call. Actually, that's the only call. Let's see. There's about 20 here. This only call on the entire list. So there's no calls to be found anywhere in the top open positions in Tesla. It goes from 181,000, number 1, down to 38,000 on the bottom of that list, and there's only one call to be found there. So yeah, Jan 1 puts, 181,000. A lot of people chimed in because they looked, including your buddy Mr. Lincoln, I think from Short Ball Show. They looked it up after they voted, and they were all just blown away that was actually the answer. That's why we put it in there. We knew no one would probably think about it, but yes. So a lot of you voted for the Jan 500 calls. Makes sense, but the answer is emphatically no. All right, let's go on here. Elsa has a related question. Elsa wants to know, or LC maybe, wants to know, is there still a lot of action on the Tesla catastrophe puts? Well, you tell me. I just told you what the number 1 open position is in Tesla land by an order of magnitude. It's those Jan 1 strike puts. So yes, I think the short answer to that question is still yes. I think a 1 strike put qualifies as a catastrophe put. I'm not sure what you're getting for that 1 strike put. That's an interesting conversation for another day out there. But still, interesting stuff out there. Catastrophe puts alive and well in Tesla land out there. We used to talk about the pars and the 50s. The 1 puts were never really on the radar. Now they are on the radar for size out there. Let's see what else we got here. Let's squeeze one more in really quickly. I just like this name. Walter Wiggums. Walter Wiggums wants to know, the question a lot of people have right now, are there any options available on Snow? Well, the short answer to that, Walter Wiggums, is no. Usually it takes around 2 weeks for options to become available. When it's a hot IPO like this, the exchanges have seen fit to accelerate that timetable a little bit. So they've gotten things listed a lot faster within a week or so out there. So I haven't seen on it. Weirdly enough, usually by this time on a hot IPO like this, I will have received a circular from like SIBO or someone else saying, hey, we're going to list options on this bad boy. We're going to do it. Here's the date. I have not received any such circular yet. So I don't have any information as to when they will be listed. I'm guessing from the lack of that we're not going to see them earlier, probably, I guess, within 2 weeks. Kind of strange. It's a hot name. The exchanges like to get in on the hot action whenever they can. But right now, estimated around 2 or so weeks seems to be the reliable time. A lot of things have to go on behind the scenes. Just because you have a stock doesn't mean you have to have options. Things have to happen. They've got that process sped up now, so hopefully we'll see them. Maybe, who knows, maybe by Monday's show. Maybe we'll have some snow. I don't think so, but maybe. You never know. And then I will be the first to report it to you there, Walter Wiggums, and everyone else who asked that question. Now it's time for us to go around the block for our final segment.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're watching for the rest of this week into the weekend. Let's start with the Uncle List of Uncle Mike, sir. What are you watching for the rest of the week?
Just watching to see if we hold the 3,300 level with the S&P. That's one thing that just definitely checking, and then watching to see if we have more Rona checks coming out. I think we might, but not necessarily this early. So watching for that, and then looking forward to the debates. One thing, I typically don't guarantee things, but I guarantee that if the debates do happen, they will be entertaining.
Interesting. A good prediction there from Uncle Mike. By the way, while he was talking, I went and checked just to make sure I hadn't missed it, and there has been no circular, no release from the CBO or anyone else that I could see about listing snow options anytime soon. So at least for the time being, no information plan on that roughly 2-week or so window there. Walter Wiggums. Mr. Rock Lobster. A, are you also a fan of the name Walter Wiggums? And B, what else are you watching for the rest of the week?
Walter, it is catchy. It's catchy.
Nice and alliterative.
I'm watching No. I am looking at some of those premiums and some of the tech stocks that are looking quite enticing to me, I have to say. When was the last time vol was 50 in Apple? So I don't know. I think this is Opportunityville. Like I said, like way down the thing, you're going to have to sort of take this election out, sort of like the coronavirus thing, and just see where we go, and and find prices that look ridiculous. I mean, as in ridiculously low, and keeping your expectations sort of grounded. So that's what I'm looking for. And as of right now, VIX is going up. Because, we do have a 2% sell-off in the Qs, and we have a 1.5%, 1.25% sell-off in SPX. But that's not a 27 ball. It's not even close. So I'm just curious to see how long the vol holds and if the election thesis I have for the volatility is correct. So at least for right now, it is.
You're right about Apple vol. Certainly something interesting to watch. It was a 60 not too long ago, so it has come in a little bit right now. It's at about a 49 or so on the 30-day vol out there, which puts it still at the 86th percentile out there, listeners. So still frothy, still juicy, but has come in a little bit. So maybe that's interesting to watch. Of course, we were just joking not too long ago on the show about Apple and Bitcoin are both at about a 60 vol. How crazy is that to say out loud? The world's largest corporation and Bitcoin, similar vol levels. So that's the world we're living in. 2020, listeners. If you want more of it, more analysis, all that good stuff, stay tuned. If you're listening live, we'll be back in pretty much exactly an hour. I may even have the Rock Lobster with me and some others to talk about all sorts of fun stuff. Probably going to talk some equity vol because it's there. Also crude oil moving a lot and a lot of other fun stuff on the horizon for you guys as well. TWIFO in exactly an hour. We'll pump some fun stuff into the chat. Be back before then. But before we go, let's go back around the horn. Let's start with the Uncle List of Mikes. Mr. Uncle Mike, sir, if folks are intrigued, they want to call you up, maybe talk about this October surprise in the election, or maybe college football, or anything else they want to vent their spleen about, where should they go? What should they do?
stcharleswealth.com to find my information. Be more than happy to talk on any of those subjects. Call me.
Especially college football. He will bend your ear about college football. Go to his office in person, wear a mask. He'll buy you some delicious Skippies, gyros, and lemonade. Talk about college football for a couple hours. Then he'll roll some puts for you. It'll be a good time. stcharleswealth.com is the place to go. And Mr. Rockingest of Lobsters, if I want to learn about kayaking or perhaps line in the sand puts, where should I go? What should I do, sir?
Well, kayaking, I would just say go to the LLB website and learn about kayaking. If you want to learn about kayaking and option trading at the same time, though, come to optionpit.com and go to the memberships area, all the goodies that we have, learn how to trade vol, learn why those options might be moving up or down, and it makes it a heck of a lot easier to invest with them. So come on over and check it all out.
Come on over indeed. OptionPit.com is the place to go. Learn how to ride a kayak in one hand and monitor the VIX term structure in the other. OptionPit.com, the place to go. And don't go anywhere. We'll be back in exactly an hour. And until then, of course, we'll be back tomorrow after the show for a little bit of vol view, so stay tuned for that. And we'll be back again on Monday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.